morning, everyone. Welcome to this morning's edition of MPC Morning Call on the 21st of July, 2025. The NASDAQ matched a new record high on resilient consumer demand, consumer sentiment numbers on Friday, and obviously there was a few fairly decent earnings results as well. Basically, we saw a big recovery, as I suspected, on Friday in the Australian market. We're up about 1.47. That was very much driven by the non-CBA parts of our index, which has been a long time coming. The Asian session was pretty positive overall, with the Nikkei up a third, Hang Seng up 1 1/3, and then China up about 2/3. European session is where the weakness sort of started to come in, and we were down a little bit in the Euro stocks, and we were down a bit in the Dow as well. The S&P was flat, the NASDAQ was around about flat as well, but did notch that very tiny record high. The Russell was down 0.7, so there was a record high there. Overall, we were a little bit worried about trade tensions between the United States and Europe as Trump threatened to impose more tariffs of around about 15 to 20% on EU imports, which is higher than the 10% rate that the EU is aiming for. 30 new tariffs just briefly sent the markets lower, basically, and major indices largely recovered, and then we finished around that flat area as well. So Netflix was out on Thursday morning, and was up a couple of percent, but then drifted off about 1% on the back of the results, but then actually got hit down around about 5.1% over the course of the session on Friday night. We also saw a little bit of weakness in the oil sector. Tesla was still rallying a little bit as well, but broadly flat overall. I mean, it's very speckled. Utilities went a little bit higher, which is probably a signal of a little bit of demand for defensive sectors in the US, but we had consumer sentiment, as I said. University of Michigan was above expectations, and look, the Federal Reserve is still adopting a wait-and-see stance on interest rates, so it's getting pushed out to being a flip of a coin in September. Cryptocurrency stocks rallied on the progress with the US regulatory legislation, the Genius Bill, and we would probably see a little bit more positivity come into that, but it generally is a buy the rumor, sell the facts sort of scenario in those cryptocurrency stocks. But we had just a quick one with Netflix. This is just a bit of an insight into streaming as a percentage of US TV time here, and it is quite a chunk, really. And then you've got YouTube, probably the largest sector, Netflix, the second largest, and then we've got Prime Video and Disney Plus coming in there as well. And then other being, any number of the other streaming services that they have over there in the States. But Netflix still making ground, but it had rallied an enormous amount over the course of the year. It's one of the best performing tech stocks in the US over the course of 2025. So I think that despite the result being relatively positive, the market probably just expected a little bit too much there. So we had the likes of Charles Schwab and Interactive Brokers rally quite nicely. That there was a nice little clue there from the banks about broking volumes that we discussed a few eps ago, and we were pretty keen on those two overall. They rallied a few percent each, and you would expect. The only one really left is probably Robinhood. They're talking about doing crypto in a normal way, having a real crack at crypto now that the Genius Act has been passed. So, but that at the moment, I think that's rallied around about 200% since the April lows, if not more. Be very brave to be buying a Robinhood up here, despite the fact that it's very obvious through the earnings signals from other companies like Schwab, Interactive Brokers, Goldman Sachs, and the banks that we're obviously going to head. Those volumes were obviously fairly enormous. So. There was a lot of talk around crypto over the weekend on social media, Twitter particularly, about a lot of the larger institutions now pretty much are going to almost forced into adopting, even the likes of JP Morgan, Jamie Dimon, the head of JP Morgan there, has been one of the most outspoken critics of crypto, saying it was a scam and they'd never be involved. So for them to even turn around on it overall, is a sign of the times. So in commodities, we had gold and silver slightly higher. Platinum drifted off a little bit. Copper was up but ended up relatively flat for the week. We are sitting at near record highs in copper around that 560 mark. And crude was off a little. Iron ore continued to eke way higher. That's a really good result for iron ore in the week, being up 4.5%. Obviously, if we can see that continue, that's going to be enormous for the likes of BHP. As I outlined on Friday morning, that is, BHP's quarterly came out and was record production in just about everything. There were concerns around the fact that their potash project had been pushed back and probably costing about 1 to 1.6 billion, which is not peanuts, but for BHP is not an absolute disaster. But obviously we've had a lot of higher prices in the likes of copper. Iron ore's been recovering. Coal prices have been recovering as well, despite being down a little bit over the course of last week, down 3%. But BHP popped its head above $40 for the first time in quite some time. We had CSL even pop its head above 260 there for a little bit as well. So some of those areas outside of CBA and the passive inflows going into index funds that the lazy super funds in Australia just gravitate towards, so they don't have to hire people to manage money. Starting to get a little bit of attention. So lithium as well, up 2%. Uranium was up a little bit. Uranium had an enormous week, up 9% in the URA, which is the Uranium Miners ETF. Australian uranium miners still needing to play a huge amount of catch-up compared to the rest of the world. Kazatomprom and Cameco at record highs, whereas Paladin and Boss are nowhere near record. They're probably 40% to 50% below record highs. So I think there's still buying opportunity there, particularly with momentum. Bitcoin was down a little bit. Aussie dollar was down a little bit as well. So it's all about earnings this week. Tonight we've got a few there: Verizon, Domino's Pizza, Roper Technologies, which is in the water industry. We've got PBOC prime rate interest rates in China. Not going to be a huge amount of come out of that generally, unless there's a major move. And then Tuesday, we're going to start to heat up with Google, SAP, which is one of the biggest software as a service, Coca-Cola, which may have a good result given Pepsi was up 7.5%, and Raytheon Technologies, which hit a record high on Friday, which is one of our favourites in the defence sector. Payment systems was one that we were looking out for to have a fairly decent run, but American Express disappointed a little bit on Friday night. I think we've got, we'll have Visa and MasterCard in the following week, which we may see some moves upwards. Block, for those who are obviously like your Australian tech stocks, Block is likely to be included in the S&P 500. That stock was up 10% on the back of that news on Friday night. That's going to really buoy the Australian tech sector today. But back to these earnings. So Tuesday, Google is one of the Mag 7. Wednesday is Tesla as well. So that'll be Thursday morning around about, or I would say 6:30 in the morning. We're a little bit split here. I think it's probably, there's going to be a big Elon's back. You could see a little bit of a drip feed through over the course of the weekend. There's some, a lot of talk around Grok, a lot of talk around the robots and the robo-taxis. I think that Tesla at these levels is probably decent value. However, that's very much a trade, and it is one of our high conviction picks. So, if you wanted to go small leading into the number, I think it's not a bad deal. ServiceNow as well. Those service stocks have been hit pretty hard over the course of the last quarter, particularly the last month. It'd be interesting to see how they go overall, because they're sort of at the pointy end of AI. helping companies adopt AI without having to have innovative staff in house. So IBM, some of the old school tech companies like IBM, involved in cloud services, etc., like Oracle, have done pretty well recently. So look out for that one. Starts to calm down a little bit on Thursday. Royal Caribbean might be interesting. The boomers are still travelling, so particularly in the US, and Intel there, but Intel's increasingly not necessarily those. The CPUs are less of a need in the AI sector. RBA minutes on Tuesday. Governor Bullock speaks Thursday. Some manufacturing numbers over the course of the week as well. So strap yourselves in for a decent one. And I dare say we'll have the following week. We will have a raft of other Mag 7 names as well. So US earnings season will definitely be the focus, with a lack of US economic numbers and Australian economic numbers. And all eyes will be on commodities and any news out of China, particularly for the Australian index, because it'll help continue that outperformance to the upside that we've managed to enjoy over the course of the last week. So I think that'll limit the weakness in the SPY. We were down about 0.5% in the SPY at the close on Saturday morning. There doesn't appear to be a huge amount of news over the weekend that should necessarily move markets. So we'll see some initial weakness, and then depending on how China and iron ore prices go over the course of the day, I would imagine we will see this thing probably drift a little bit higher and maintain some ground. That's it for this morning. We will speak again tomorrow morning.
General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.